Ladies and gentlemen, good day and welcome to SPML Infra Ltd Q1FY27 earnings conference call hosted by Aryan Capital Markets Limited. As a reminder, all participants' lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference to Mr. Rohan Baranwal from Aryan Capital Markets Limited. Thank you, and over to you, sir.
Hello, everyone. A very good afternoon and welcome to SPML Infra Ltd Q1 FY27 earnings conference call hosted by Aryan Capital. From the senior management, we have with us on the call today Mr. Manoj Rika, sir, Executive Director and CFO of the company, Mr. Malay Chakraborty, EVP and Projects, Mr. Samir Patel, Chief Operative and Technical Officer, BSS, and Mr. Arun Agarwal, Vice President, Finance and Accounts. Before we begin the earnings call, we must remind you that the discussions on today's call may include certain forward-looking statements and must be therefore moved in conjunction with the risk that the company faces. I would now like to hand over the call to the management, Mr. Arun Agarwal, for his opening remarks. Thank you, and over to you, sir.
Good afternoon, everyone, and thank you for joining us for the SPML Infra's Q1 FY27 earnings conference call. We sincerely appreciate your continued trust and interest in our company. So, to begin with, as we begin FY27, India's infrastructure sector continues to evolve from capacity creation towards capability building with water security, grid modernization, renewable energy integration, and energy storage emerging as fundamental pillars of the company's development goals. For SPML Infra, this evolution aligns closely with our long-standing strengths. Over 4 decades, we have built deep execution capabilities across water and power infrastructure, and over the past 2 years, we have transformed the company through disciplined bidding, balance sheet strengthening, and strategic investments into emerging segments. Investment now beginning to translate into execution and scale. Now, let me briefly touch upon the industry environment. India's energy transition presents an equally compelling opportunity. The Union Budget 2026-27 allocated 1,09,029 crore to the energy sector, driving investments in transmission and grid modernization. As renewable energy capacity expands, over 100 gigawatt of base tenders have already been floated against a projected requirement of 236 gigawatt by 2031-32, one of the most significant infrastructure opportunities of the next decade. Water remains one of the India's most critical infrastructure priorities, with over 81% of rural households now covered under the Jal Jeevan Mission. The government has extended the mission to 2028 with a 67,670 crores Union Budget allocation and restructured it into JJM 2.0 with a total outlay of 8.69 lakh crores. Alongside Amrut 2.0, Namami Gange and river linking programs, nearly 17 lakh crores of planned government investments across water infrastructure is expected to create a robust pipeline over the medium term. Against this backdrop, SPML continued to make meaningful strategic progress during this quarter. Our order book today stands at approximately 5,100 crores, providing healthy medium-term revenue visibility. More importantly, the quality of order book continues to improve significantly. Only around 1,251 crores order relate to legacy projects, while the balance consists predominantly of projects carrying expected operating margins of 10% or higher. A sizable volume of business has started coming in from drinking water, irrigation, river linking, sewerage, power substation, and base. And the company is hopeful of surpassing its guidance of more than 5,000 crores in order intake in the current financial year, against which we have taken 1,293 crores order in Q1 and are L1 in rupees 265 crores of orders. On the manufacturing front, we continue to make encouraging progress at our battery energy storage manufacturing facility at Supa MIDC Pune. The first phase of our 2.5 gigawatt assembly line is fully ready. The company has also started obtaining various certifications from IEC, UL for its battery pack, which are required for supplying the container to NTPC against its current order, and we are targeting to build the NTPC in Q4, subject to requisite approvals. The line will subsequently be scaled to 5 gigawatt together with an annual manufacturing capacity of 600 container units to cater to future orders for battery packs and containers, for which the company is continuously bidding and approaching various EPC contractors as an OEM player. We expect the capacity enhancement from 2.5 gigawatt to 5 gigawatt along with the container facility expansion to be completed in the first half of FY 2028, along with the orders for the aforesaid facility, which addresses a market potential of 208 gigawatt by 2030, up from 34.72 gigawatt in FY 27. Tender in this space are coming in continuously, and the company participates on a regular basis based on its selected criteria. The company holds a competitive advantage over other base players on account of its manufacturing facility and exclusive technology partnership with Energy World US. This facility positions SPML as one of the early movers to manufacture advanced grid scale battery energy storage system under the government's Make in India initiative. Turning to the status of our NTPC order, the advantage has already been received from NTPC. Design and drawing approvals are expected to be completed by Q3 FY27. We anticipate the sample container being approved by NTPC by December, and subject to their approval, we will commence supply of container to NTPC in Q4, and the same will be completed within their contractual timelines of FY28. On the water and power front, we track a pipeline of about 134 upcoming projects worth close to 98,725 crores across 11 states, with irrigation and water supply making up over 80% of this value, reinforcing water infrastructure as the biggest growth driver in the public capex cycle. Key projects include the Vainganga-Nalganga river link of around 1 lakh crore, Marathwada water grid 37,600 crores, Ken-Betwa links MP component of 24,300 crores, and Tapi Basin mega recharge scheme of 90,200 crores. Additional tenders are progressive in Bihar, Odisha, Rajasthan, Gujarat, Kerala, and the Northeast, along with the PSUs like Steel Authority and NMDC. We have significantly improved our financial position through disciplined deleveraging and strong promoter support. Our promoters have infused approx 400 crores during the last 3 years, helping our net worth double from approximately 500 crores to over 1,000 crores, while our debt to equity ratio has improved from 1.1x to 0.4x now. Our legacy debt position also continues to improve. Of the total outstanding obligation of around 700 crores, we have already repaid around 325 crores, with the balance 375 crores fully backed by an arbitration award of approximately 678 crores along with accrued interest. In addition, the company has arbitration claims of around 4,526 crores, with nearly 40% expected to convert into awards over time as per the past experience and records. Reflecting this transformation, ICRA has upgraded our long-term rating to BBB stable. Simultaneously, CRISIL has also assigned us an BBB stable on our credit facilities. We have also enhanced our credit facility of 505 crores to 860 crores from reputed PSU bank, the documentation of which is under process, and approx 300 crores surety bond line, ensuring adequate liquidity and sufficient banking limits to support our growing order book and larger project opportunities. Coming to our financial performance, revenue grew 74% Y-on-Y to 286 crores, EBITDA increased 81% to 28 crore, and PAT increased 87% to 22.7 crores. EBITDA margin improved to 10% in Q1 FY27 from 9% in the corresponding quarter last year. On a Q-on-Q basis, revenue remained largely flat, while EBITDA improved 17% over Q4 FY26. PAT declined 20% Q-on-Q, largely on account of a one-time tax reversal in Q4 FY26 numbers. The company has made a jump of around 74% on a Y-on-Y on the turnover, mainly on account of execution of new orders obtained in SPML 2.0. The company is maintaining the turnover of the preceding quarter, as the turnover is mainly related to orders which was taken in the last 2 years, for which all the design and drawing approval have already been obtained, which shows consistency in the project execution. With the allotment of new orders and the expected orders that we are targeting in water, power and base, whose impact will reflect mainly from Q4 of 26-27, by this the company is maintaining its guidance of an increase in turnover of more than 25% compared to the corresponding period in the last financial year. The company has made a similar percentage improvement in the profitability of around 87% on a Y-on-Y basis. The percentage of profit compared to the last quarter has also improved slightly because of a higher contribution from the new orders. The company maintained its guidance of growth of more than 25% in the profit compared to the last financial year. There is a reduction in other expenses mainly on account of reduction in legal and professional charges. The company realization from various projects is reasonably healthy, due to which company was able to manage a healthy FD position of around 150 crores as on 30th of June. The company will continue to manage its working capital requirement through an escrow mechanism in the water sector with the suppliers, which reduces the working capital requirement substantially. However, the company is very comfortable regarding RAB realization from all its projects, due to which sufficient liquidity is there in the banks by way of fixed deposits. The employee cost has increased due to the recruitment of new employees for the water, power and base operations. The finance cost includes interest on mobilization advance of rupees 3.5 crores, 63 lakhs on account of BG commission and 27 lakhs towards the Ind AS adjustment on ROU assets. The mobilization advance gives the company additional surety on the realization from the projects rather than the funding requirement, as the company is having sufficient FD balance in the bank account. With a stronger balance sheet, a significantly improved order book, expanding capabilities across water, power transmission and battery energy storage system, and a clear execution roadmap, we are well positioned to participate in India's next phase of infrastructure development. With that, I would now like to open the floor for the questions. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shubhi Gupta from Trinetra Asset Managers. Please proceed with your question.
Good afternoon, sir. Thank you so much for the opportunity. So my first question is that our order book, which is about, for new orders, is about 3,843 crores. So I want to understand, this is excluding our JV partners' share?
No, this is basically our share in the JV orders. This includes there.
So how much is excluding their share?
So all the JV, because it's a different JV on the different percentage. So some are 26%, some are 51%, 49%.
Yes.
So our share we have included in this 3,800 crores.
So this is just our share. This does not include the JV's share. Yeah. Also, sir, since we are looking at, our margins are improving and about 9.9 right now. So am I right to believe that in coming time we'll be, targeting 12% of margins as the new orders increase?
As we explained into our previous Concall, that as a strategy, at this moment we don't take any order less than 10%. So it is always more than 10%. Like at the moment, the 3 orders which we have taken, Kunar, Kekri and Indore, all are more than 10%. So you can jolly well estimate that any order which we win at this moment, the profit margin, EBITDA margin, or the margin from the project will be more than 10%.
Are we looking to execute this, our legacy orders? I think it's about 1,251. I believe that we can execute this by FY29.
This will be this year and next year, most of the legacy order will be executed.
Okay, sir. And so one more last question. So for our BESS, sir, since you mentioned that for NTPC, our drawing approval and everything will be done by, December this year. So what kind of numbers are we expecting to book in the revenue with respect to BESS? What is an approx amount?
Any of our orders, basically mostly time is taken by the design. It's all our design drawing approvals orders when we take on to the EPC. So depending upon 3 to 8, 9 months, that's required for the approval of all the design and drawing. And then as per the schedule, we keep on delivering. So if everything goes right, then we can expect 200 to 300 crore of base order execution into this financial year.
Okay, sir. Thank you so much, sir. All the best.
Thank you.
Thank you. The next question is from the line of Aditya Banerjee, an individual investor. Please proceed with your question.
Yeah, hi. Thank you for the opportunity. So my first question to you, sir, is that what is the FY27 revenue target and quarterly run rate?
As Arun has already told, and it is our previous all the Concall, we are maintaining that now we will have the revenue guidance more than 25% into the last year. It will be more than the revenue, maybe more than 30% will be from the last year or more than that. And this corresponding, the profitability will also be. So every quarter with the new orders, we will keep on updating, but the revenue growth both on the profitability and on the turnover will be more than 25%.
Oh, okay, got it. And my next question is that how much of the 50 to 100 crore FY26 spillover has already been billed in Q1?
Pardon?
Sir, how much of the 50 to 100 crore FY26 spillover has already been billed in Q1?
It's a regular practice. If you see, that depends on basically with the, it's a government order and there are various things linked based on the cash flow availability of to that project. We keep on making the billing to the customer. So the whatever 50 to 80 crore which we missed into the last year will be quarterly spread into this quarter and throughout the year.
Okay, got it. And my another question is that how much BESS revenue will come in FY27 and what will be the margin for it?
As I told you, any orders which we are taking not less than 10% margin. And second question is the design drawing approval is under process. We are submitting all the drawing. We are expecting all the approval to be obtained from the NTPC by December. So in the Q4 we will have orders execution from the base unit. Maybe 200 to 300 crore is our targeted, subject to getting all the approval from NTPC.
Okay, sir. Thank you so much.
Thank you. The next question is from the line of Khushi Solanki from KA Securities. Please proceed with your question.
Hello.
Hi.
Hi, am I audible?
You are audible, ma'am.
Yeah, so I wanted to ask, what is the current status of NTPC and when does the billing start?
Again, this is the design drawing approval. So NTPC, we have executed all the drawing, all the documentation agreement. We have received the advance from the NTPC. We have given all the surety bond which is required for the performance and for the advance guarantee. The approvals are started coming. We are expecting the approvals to be completed by December. Once the approval will come, we will start giving the delivery of the container. So we are expecting some revenue of the base, 200 to 300 crore in the Q4, subject to approval of NTPC. All the design drawing and the draft container, which basically the model container, which will show them. So that's our target into this financial year of the NTPC order.
Okay, got it. And one more question. How much additional CapEx is required to execute the current order book and BESS expansion?
BESS, we have already informed that the total BESS 5 gigawatt and the 600 unit container, the total requirement is 236 crore, which we have already financed. We have raised the equity, and the equity money is lying into the bank account. We require the container 10 crore term loan. That also we got the sanction. So all the requirement of the funding is there into the system, for which we don't require any further things into that. And for the BESS, all the LC limit and the working capital we have already there in the sanction limit with the banks. So I don't have any issue into execution of that also.
Okay, sir, got it. One last question I wanted to ask. What is the one constant that could prevent SPML from achieving more than 25% growth in FY27?
It's the same risk like we carry when we come out from the home and the road accident risk we have. At the moment, we have all the design drawing approvals are there for all the new orders which we have obtained. NTPC design drawing approval has started getting. My base container this relining facility has already commissioned, so I don't have 2.5 gigawatt. I don't have any problem. So the logical, we don't have any issue by which we will not have the 25% or more growth into the top line and bottom line. I'm not finding any reason of not having any logical reason. If anything happens which is beyond anybody's imagination, that I'm not able to predict.
Okay, so that's it from my side. Thank you.
Thank you. The next question is from the line of Yashvi, an individual investor. Please proceed with your question.
Hi, thanks for giving me this opportunity. My first question is, how much of FY27 revenue will come from the existing 5,000 crore order book?
As I told you, more than 25% growth will be there into the revenue. Base revenue will be roughly around 200 to 300 crore. Rest is into the water.
Okay. My next question is
existing order, because this year, whatever order we will take, very limited revenue you will reflect into the last quarter, because now whatever order we will take, it's required the design drawing approval. So you will get some revenue from the new order in the Q4. Rest will go to the next year.
okay. And what is the actual FY27 EBITDA margin target excluding one-off?
27. This year.
Yes.
This year, as I told you, it will be more than 25%. Both in all the field, in the turnover, in the EBITDA, in the PAT, it will be more than that. So based on the keep on order and execution, we will keep on updating in every con call.
Okay. Thank you. That's all from me. Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and one now. The next question is from the line of Utsav, an individual investor. Please proceed with your question.
Hi, sir. Thank you for taking my question. I just wanted to know about the BESS project. Are we doing it exclusively for NTPC or, are there any other approvals in line as well?
No, BESS we are taking, this BESS we are setting up the this manufacturing facility, which is for everyone. It will be fetched to our EPC requirement for the BESS order which we will receive. It will give the OEM requirement of the other BESS contractor who get the BESS order. So this will meet both the requirement into that. Then the container facility which we are creating, that will be also for our BESS order or to the outsider. So this BESS manufacturing activity will contain both the facility. So the revenue stream will be from both the side. One, as a EPC, whatever order we are getting, like NTPC we have got, and future we will further get the order. As a EPC player, we will get our battery pack will be utilized for our EPC unit. And any other EPC contractor who get the BESS order, we will supply as an OEM to them also our battery pack. So there will be two revenue stream.
So, sir, regarding this, regarding our BESS project, what you're saying is, so the battery will be will procure from Energy Vault, and then we'll put it in the battery packs, our battery packs. Is that how?
Technology is Energy Vault, and the cell we are importing from China, converting the cell to battery pack to our unit. That battery pack is utilizing into the container, which will be our order container or any other EPC order which any other contractor are getting. The same battery pack can go there also. So that's the sale everybody is importing from China. So we will also import. But our container will be the Energy Vault technology.
Okay, right, sir. And so probably we'll start having revenue from last quarter of this year, and next year we might have, we might be utilizing the full capacity that we have. So expansion plans would start then and there, or how will it go about?
Expansion plan, as we have told into the opening remark, there is a huge opportunity into the BESS. There is a huge requirement, there is a huge government outlay is there, and it is continuously increasing. So a lot of tenders are coming. So this battery pack capacity enhancement from 2.5 to 5 gigawatt we have already started. That will get completed into the first quarter of the next year. Container manufacturing already started. And we will keep on getting the orders. We will keep on getting the orders, and that will be utilized. So already we have done. It is not linked with any other future order.
Thank you, sir. And just one more thing, if you can guide us, like what is the per megawatt revenue that we can generate from the BESS pack? Just a ballpark figure will do.
Basically, if it is a 2.5 gigawatt, it is revenue guidance will be between 2,000 to 2,500 crore. If it is a 5 gigawatt, it is roughly around 4,500 to 5,000 crore.
Right.
Thank you. Potential revenue generation from the BESS plant.
And in this, the capacity can be utilized fully, or will there be around 70, 80%, 90%, some kind of figure of utilization?
The kind of order we are getting and the kind of market availability is there. we are expecting a sizable growth on the capacity utilization into the current year and next. Current year, so we will start our NTPC order, we will execute with that. Next year, we will have a good utilization of our 2.5 gigawatt, mainly 1 gigawatt per NTPC will be utilized. And then the new order, then the base order. We are expecting a sizable capacity utilization in the next 2 to 3 years into the base capacity.
Okay, sir. And going down, I mean, will our focus change from water-driven projects to BESS, or will it be balanced?
We have three segments, if you see. Rather, two segments. One is the water. Water includes the drinking water, irrigation, river linking, sewerage. All these things are the water. That is one segment. Second is the power substation, where there is a huge demand and growth into the power substation because a lot of thermal power has started. The substation modernization process is going on, like SAIL is coming in a big way. Various other players are coming into the way. The government has started upgrading their base substations. So that is our power EPC, and then the battery. Battery, we will have our own battery pack EPC business and OEM business. So battery will be one, power substation will be second, and water will be the third.
Yeah, so I was asking, I mean, will we be focusing on all the segments, or
all the three.
will we be
battery because it is a new generation and more demanding. So I'm expecting, and it can execute it much faster. So you will find more revenue from our BESS unit than the power, because any water project, it takes 3 years to 3.5 years to complete. If any battery project, it will complete into 18 months. And if it is as a OEM player, it will be completed. Our battery pack requirement will be into 3 months to 4 months. So you will find more and more revenue generation from our battery. But our focus will be all the three.
Right, sir. Thank you.
Thank you. The next question is from the line of Shashank, an individual investor. Please proceed with your question.
Hello, sir. Thanks for taking my question. I was looking forward for the battery imports that we may do for the battery packs. Given the dollar devaluation of rupee, has it impacted for any of those purchases that we would do for the battery cells? And the second thing is, although there is a sizable opportunity for this, what are the challenges of the competition that may get into this? Thank you.
On the first, we as a strategy, we have made very clear that we will keep the PV clause in all the contract. So any upgrade, because we have the expertise on execution, and we will take a call on execution. Rest of everything, whether it is a steel increase, whether it is a dollar increase, whether it is a lithium increase, all we are covering into the PV clause. So we are keeping ourselves aloof into that. We don't want to earn, we don't want to lose into that. Our expertise on execution, and we will keep on focusing on our execution. If there is no PV in any contract, as a SPML 2.0, we have targeted not to take that order. So that aloofing me from any fluctuation into any of the product which are utilizing in our EPC. So that's replying your question number one. Question number two, what was yours there?
On the competition, although the opportunity is very large, but what SPML Infra would be doing different than, I think, about Pace Digitech or any other company who want to be into EPC? And one more follow-up question on top of it, that are we looking forward for the commercial and industrial usage of BESS as well to get businesses orders from there? Because it looks to be a very large opportunity there as well.
I think Samir will able to tell better that what additional advantage we have, because we have the only company which has the technology tie-up. We are one of the limited company which have our battery pack unit ready and started, and we got the largest order. But Samir, if you can add value in this.
Yeah, of course. With the tech partnership, what we are getting is multiple portfolio of technologies. It's not just current fiscal model year technology. So India is kind of demanding 5 megawatt hour DC block systems for this year. But when we think about the future proofing and the road mapping of the technologies, you'll see that next year it's going to ramp up to 6.25 or 6.9 megawatt hour DC blocks, which are a lot more cheaper than today's 5 megawatt hour DC blocks. So we get those technologies as part of the handshake. On top of that, we also have other technologies which is not related to the batteries. These are things like the hydrogen systems or the gravity fed systems or the sodium ion systems. So you can say that whatever our partner is going to develop, we are going to get those technologies, which are already commercialized. And on top of that, this current handshake also allows us to, ensure that NPPC is happy with the provenness criteria which Energy World already meets as a pre-qualification. So it makes us easier to communicate with NPPC for the future technologies as well.
Thank you. And what about the commercial industrial usage of BESS? I think that could expand it. Think about the gensets could get just replaced with that.
Okay, so from a commercial industrialization standpoint, this BESS technology is purposely targeted for grid applications. Saying that, we are also working to see how we can transit this technology to off-grid solutions, which we already have the technology for 4.17 megawatt hour platform shared by Energy World as of last year. So we are ready to deploy both AC block systems, which is feeding into CNI market, and DC block systems, which is going on to the higher large-scale projects.
Okay, I think that means that is already in a pipeline of discussion somewhere. Okay, thank you, sir.
Yeah, new ones are in the pipeline.
Okay, thank you.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Arpan Gandhi from AG Capital. Please proceed with your question.
Hi, sir. Can you please comment on the full year guidance and how do we see order book pipeline in water and the competition intensity over there?
As we told that this year our guideline for the order will be 5,000 crore, out of which roughly around 1,200 crore we have already received in the Q1. We are L1 into 230-240 crore. So we will, and that there are a lot of orders which are coming into the BESS, power substation, and into water including drinking water, irrigation, and river linkage. So we are expecting our order book target to be satisfied or surpass more than 5,000 crore into this year. But our target into this year 5,000 crore, which is our categorized contract where we have margin of 10%, where we have PV, where we have all the condition funded project, and where we can do the escrow mechanism. So our criteria project, we are getting more than 5,000 crore. And if you see in the EPC, whenever you get the order, it is required 3 to 6 months to complete the design drawing and then the execution. If it is a water, then it will execute it into 3 to 3.5 years. If it is a power substation, it is 15 months to 18 months. If it is a base, it is again 18 months is the period. And if it is a base OEM, it will be 3 to 4 months. So based on the order, we will keep on having our execution and turnover. But as a guidance, our turnover from the last year more than 25%, and then the EBITDA and PAT will also be more than 25%. That we are targeting, and every quarter we will upgrade that based on the order book position and the execution.
Okay, sir. And are we bidding for any projects in Amrut?
Yes. Our Indore project is Amrut project only. Amrut is a good scheme, and we are projecting all the funded. We are there.
Okay, sir. And my last question is regarding NARCL. What is the status as of today, and how much are we planning to repay in this fiscal?
NARCL, the total our inclusive of interest was 700 crore of our liability, on which we have already paid 320 crores, which includes 45 crore prepayment that from the beginning we are prepaying to the NARCL. All our balance 375 crore are linked with the arbitration award. We have roughly around 650 crore of arbitration award, where we are accumulating the interest on daily basis, whereas our NARCL is inclusive of interest of roughly around 375 crore we have to pay. We are targeting few arbitration award also into this financial year that will further reduce our liability to the NARCL. So we are expecting roughly around 300 crore of left this NARCL payment after the completion into this financial year.
Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Utsav, an individual investor. Please proceed with your question.
Hi, sir. I just had a follow-up. So, regarding when we supply, we have documentation and all, and there is a whole process before we supply to NTPC. So, I guess having a tie-up with Energy World, do we have an advantage over the timeline of is there any advantage of having a tie-up with Energy World in terms of getting approvals from NTPC?
Provenness test is the live example, because that's the highest test which the NTPC has to approve, and that is where the Energy Vault presence gives us the tremendous advantage, and that will give the comfort to the entire BESS industry when it will be approved by the NTPC. So that's the major advantage. The technology is fully tied up, so that gives us the various design drawing approval, helps us in various design drawing approvals. So definitely, if you are a tied up technology which is a proven one, you will have lot of advantage into any execution, into any order. So we are getting that benefit.
Okay, thank you, sir. Thank you.
Thank you. The next question is from the line of Vivek, an individual investor. Please proceed with your question.
Hello.
Yes, Vivek.
I wanted to ask, with the growing demand in BESS industry, are we looking forward to expansion with beyond 5 gigawatts in longer term?
Definitely it will be, but at the moment we will first utilize 100% our 5 gigawatt, which we are targeting by 2029 or 2030 to utilize the entire 5 gigawatt very efficiently. And then we keep on expanding based on there is a huge business opportunity into the BESS. And we, as Samir has told, we have the added advantage into this industry because of the first mover, first tie-up of the technology and the plant setting up here, and then the EPC knowledge which we are carrying from last 45 years. So we have tremendous advantage sitting on the BESS. So based on the demand, based on our capacity utilization, based on the order, yes, we will further plan to expand our capacity beyond 5. But at the moment, we have not discussed this matter into our board level, so I don't want to comment. But we keep on commensurating with the business opportunity which are available, and we will keep on expanding our capacity.
And also, my second question is that when we'll advance, whenever it may be, will we be also looking to acquire some lands for it, for the factories, or the expansion will happen within the current factory, or what?
If you see 236 crore, the total, we have acquired 25 acres of land. That 25 acres of land is not required for my 5 gigawatt or for my container facility. It's much more land, because getting the land to the adjacent area is very difficult. So we have taken the larger area, looking into our future growth into the BESS facility and container facility. So we have sufficient land for our growth purpose.
Okay. Thank you.
Thank you. The next question is from the line of Aditya Raval from Essential Research Partners. Please proceed with your question.
Yes. Hello. Good afternoon, sir. Am I audible?
हाँ.
एक्चुअली सर मेरा क्वेश्चन ये था कि रिसेंटली अहमदाबाद के अंदर डंपिंग यार्ड के अंदर बहुत बड़ा टेंडर पास आउट हुआ है, तो वहाँ पे कंपनी का कुछ पोटेंशियल दिख रहा है?
टेंडर यार्ड मलेदा, इसमें कुछ आप कमेंट करेंगे? हेलो.
यस. यस सर.
अहमदाबाद में क्या हुआ है? कहाँ डंपिंग यार्ड?
सर अहमदाबाद के अंदर पिराना डंपिंग यार्ड का पूरा गवर्नमेंट ने टेंडर बाहर पड़ा है वेस्ट मैनेजमेंट के लिए. तो मैं रिसेंटली अभी वहाँ पे 2030 के अंदर ओलंपिक्स भी आ रही है, तो वहाँ पे गवर्नमेंट बहुत सारे वेस्ट मैनेजमेंट, वाटर मैनेजमेंट के रिगार्डिंग प्रोजेक्ट्स बाहर निकाल रहा है.
नहीं, तो जो भी हमारे टेंडर आते हैं उसमें तो हम लोग इन्वॉल्व रहते ही हैं. नाउ वी हैव टू सी द क्राइटेरिया वेदर इट इज मीटिंग आवर रिक्वायरमेंट, एंड देन वी विल डेफिनेटली कीप ऑन पार्टिसिपेटिंग इनटू दैट. उसमें तो होता ही रहता है, मतलब इट्स ए ऑन रेगुलर ऑनलाइन एक्टिविटी. एवरी मंथ वी आर पार्टिसिपेटिंग इनटू मोर देन 10,000 करोड़ ऑफ टेंडर. सो ये तो पार्टिसिपेट होता ही रहता है. जो अपॉर्चुनिटी आती है और जो अपॉर्चुनिटी हमें लगती है कि हमारी क्राइटेरिया मीट आउट करती है, सो वी कीप ऑन पार्टिसिपेटिंग. एंड गुजरात इज आवर मतलब प्रिफर्ड स्टेट.
ओके, थैंक यू.
Thank you. Participants who wish to ask a question may press star and 1 at this time. Ladies and gentlemen, that was the last question from the participants. I would now like to hand over the conference to management for their closing comments. Thank you, and over to you.
Before Arun close the comment, I would like to thank to Arihant for coming out the report today, and it's capturing most of the aspect very properly. And now Arun on the conclusion.
I would like to once again thank all of you for your continued interest and confidence in SPML Infra. This quarter reflects the tangible progress of our transformation journey, a stronger balance sheet, and improved order book quality, encouraging momentum at our base manufacturing facility, and consistent execution across our water and power projects. We remain firmly on track with our guidance for the year and are confident the investments we have made over the past 2 years will continue to translate into sustained growth in scale and profitability. We look forward to updating you on our continued progress in the quarter ahead. Thank you once again for joining us today, and I hand over the call back to the moderator. Thank you.
Thank you. On behalf of Arihant Capital Markets Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.